good. They were the quickest turnaround. But I like the material the most. They were the more expensive one, of course, but it is what it is there.
I'm guessing your hat hasn't turned up.
What's that?
I'm guessing your hat hasn't turned up yet.
No, that's a different brand. And they are still in shipping, which is fine. And I want to try both of them, see which one I like the most. But thus far, this brand has been very, very, like, the material's nice. The logo was good. No complaints there. Like, it's very, very satisfactory. And there we go. Everyone. And we're good to go. So they should all have it. I need to shave, dude.
Looks good, mate.
Been a week.
Definitely got some greys.
Yeah, right there in the front. I know. It's been a week.
Been a rough week.
A rough week. Actually, it's been a really good week of trading. I added up all my trades for August. Got 24 wins and 2 losses for the month of August.
Damn,
right now.
Fucking hell, that ratio is just disgusting. I hated yesterday trading. It was so boring me.
I got some good trades off yesterday. I'm not gonna lie. There were some decent ones out there. Like, but we're looking at different things. Like, we'll talk about it, but like, we were looking at different things. Let me get my screen up.
I was waiting for a long time for a trade that never came, and then I got sick of it and went out.
The trades never came.
But then the day before, mate, I was very happy with that day.
What do you got going on in the order flow? I don't have my XO up.
Let me get a screen up. Pick which screen I'm getting up.
I'm just looking to see what the reaction's like here at the low.
Yeah, so we've had some traders come in and get trapped. So here we are.
There you go.
Zoom. So you had some shorts come in here, and we're now putting the pressure on them. There is definitely buyers coming in, so potentially get that pop up to the VWAP. Let's see. Until we claim the VWAP, there's if we were to claim the VWAP, it'd look pretty good. Why? You've got one trap trade. Well, you've got 1.7 million trap traders here, 2.4. Definitely some here. We've got like a fair few million trap traders if we were to claim the VWAP.
Mm-hmm.
But you got to claim it, And there's a daily level just around that VWAP. It's at 22949. So claim that.
I'm working off of 22,898 as my static level for that area. That's the Q1 from 2021. So it's just always there, but comes in right where that daily is.
I'm with you. But yeah, people shorting right at the lows. Typical, to be fair.
Yeah.
Always a good move.
I like it because it leaves the lows a little bit here.
Yeah, it brings it in for the swing failure pattern later.
Yeah, ideally, anyway, that'd be the best play. But we both know what happens though if you don't swing fill those levels and you just take those lows and fucking keep going. It's fucking a lot of empty space. Yeah.
Is this single print as well still?
I haven't looked at the single print. You have it on your chart.
Yeah, it's a single print still.
Is it a merge or is it something from like a single session?
Yeah, it's from back here. So it's disgusting. It's from this. We had like an absolute tear up. Do you remember? Sorry, shit's disgusting.
T-Bone calling out the near short. Very nice. Looks like we got a decent crowd in here. Good. I don't know that we're going to get CVO tonight. He might be working on his setup a little bit still.
Yeah, so we've already tapped into it a couple of times.
Yep. Yeah, we talked about that the other day, or I guess during the live stream. Having hit it a few times, it's usually not. Oh, I see it right there. Yeah, on your PVAs. Yeah.
It's not just a PVA; it is a TPO chart. If we go back in time.
Oh, okay. I haven't looked at those in a hot minute. There's just been too much going on. Plus, like to me, the levels have just been so clear lately, anyway. That
So it's this one here, and what I've done is, because this is just where a candle has crossed over, it is effectively all one single print, because it was such a big move that the candle's closed, so then it's continued on with it. So that's all this gap is. So this is effectively one single print here, and that's
what I really want to know is, like, how does this affect the moon cycles? Fucking question of the day. Oh man, that's classic. For everybody that's in, we're just kind of going over the Bitcoin dump, and if a trade presents itself, we do plan to take it. Thursdays are generally more of a relaxed stream, but good volatility, so we'll be keeping an eye on the lows here and seeing what we can get if we maybe get the opportunity at a trade. Right now, I would expect a little bit of a pullback potentially, though, off that quick pump up. Not gonna lie.
Let's see if you've got a TPO point of control down here.
Do you?
Yeah. I think I might have deleted my TPO. Oh, and there it is.
I'm watching the previous week low right now, going into that 6M1. So it lines up really nicely. You were talking about 25,552 old high. I've got the previous week low at 22,517, and then the 6M1 at 22,407.50. So for me, that's a big area on the chart that if we're gonna get some form of a like a swing failure pattern or of the prior week low, especially, that would be the area right into support, and also be a deviation of the overall range for the month, and that would be enough for me to want to take an intraday trade anyway, because then what happens if you get a deviation. But realistically, you're only looking for a back test of that $23,000 level at that point. So it's not like it's a huge move, but it's enough for enough to get your rocks on an intraday trade for the week. There's a little bit of a pullback there. There we go. So I would be curious to see if we leave the previous week low. I just don't foresee us doing it. Let me pull up.
It's just struggling. It had the trap traders there.
But I didn't see as many buyers coming in. I saw some, but it just nothing. I pulled up XO. I'm on the volume chart, of course. I'm not on the a time chart, but I'm looking at it, and you did have some come in on this last candle. They took their sweet time. You have some imbalances, so I'll be curious to see if they defend this low here. If they don't, I would expect to see the previous week low taken, but we'll see. Yeah, this isn't a very good low from what I can tell. I haven't messed with the Delta chart in a while.
I need to finish the video on that, actually.
The Delta?
I've nearly done the PowerPoint on that for this chart. Where is it? I think it's here. Yeah.
Yeah, they had the opportunity right here on this. They had a real quick low. It was nice. Have some imbalances and then just gave it up. But neither side's really putting in work right now. Volume's coming in very slow. It's taking 10 plus minutes to fill a 5 mil right now. So it's not like the Asia session's bringing the rain here volume wise. Yeah, Phil, 21,200 is definitely an area of interest. It's one we've talked about. 21,247, I believe, is the exact level that I'm looking for. But I do see that as just a pit stop. I don't think that'll be the end all be all. If we get that low, I think you might as well just start looking for 19,916 down to 19,301. In my opinion. But
what if we lose this area?
He was saying 21,200, and I was saying, yeah, if we get to 21,200, I do think it's a pit stop. I think it's very similar to 23,166 at that point. I think you're just looking at it as an area of interest, but I don't foresee it being a reversal area at that point. I would look at that more as just a tradable region of the chart. Can price reverse there? Sure, anything can happen, but it's not the most probable. But like I said, I'm open to being wrong. And technically we haven't broken down yet. Like I think we will ultimately probably make our way through this region, but like the region of the chart, like you were saying, 22.5-ish, we'll say it's like a zone, kind of like $100 area there down to 22.407. That's really going to be the region of the chart that like needs to hold. Like we're in support right now. So like this isn't a place you can really be looking to add to shorts. Like, can it just nuke from here? Sure, anything can happen, but like you can't be looking to add to shorts in this region. You got to be adding on the bounces or from higher up. So you really should be looking for intraday bounces from these regions. And I think we're coming into an area where we may be getting that. Is this shark going to be valid or invalid? It's pretty close to being invalidated, in my opinion. You do have the potential for a shark here at the D leg.
Show us, lad.
Oh yeah, I guess I'm not showing my screen.
You're there talking through the chart without it up.
yeah, that's my bad. All right. So yeah, this would be what you're looking for. And I say that it's pretty close to being invalidated because it is. You have to at least an 886 and a 1618 expansion here for the D leg, according to Scott Carney anyway. That's the reaction you want to see, but it can go as high as the 1.133 right here, right? So you're looking for an 886 to 1.113, and then you're looking for up to a 2.24. So this is already at 2.336. I would give this a little bit of hopium because you're really stretching it here, but this would be saying, if you start losing this low, I would just invalidate this whole thing. Timing's not terrible. Otherwise, yeah, the harmonic is only valid if we start putting in that low. Like if we start, finding something like right here. So we just back test the low. Looks like we just took it. Nice little swing failure pattern there on the low. And you can see that you do have buying imbalances coming in. So, yeah, still not super, super happy with the rate at which things occurred here, but that doesn't mean, they can't bounce out of this region. I would just look for it to come back to it eventually is all.
Yeah, for sure. Maybe we get a little push up to the VWAP.
Potential. Yeah. I would say VWAP and the Q1 lining up there right around like that 22,898 level.
Yeah.
Be quite nice, actually. Yeah, it's your point of control for the developing session. Would make sense if it's finding its legs here. So I'd be looking for that like little $100 move. Kind of a boring thing to shout out in the chat, $100 move, but sometimes you have to kind of deal with the cards you're dealt in the moment, guys.
Oh, mate, for the people that are in the the Discord that watch the live trading sessions, like sometimes it's what makes you money.
This is true. I took a couple, $60 to $80 moves today. So you don't have to trade, but sometimes if you're going to, you have to deal with the hand that you're dealt.
Yeah. See, so you were like, oh yeah, the loads of trades. You're taking small ones.
Yeah. So out of those 24, I would say the 24 wins, probably like 15 of them are pretty small. Like they're scalps. But I mean, anytime that you're going to be pushing, because I'm going to probably finish the month with somewhere around 50 to 60 trades, you got to think a lot of those are going to be like dink and dunks. They're not going to be anything too big.
Yeah.
So you're already getting a little bit of bear div if this doesn't push.
Yeah, it's not looking the best.
Yeah, it's not a great low. Like I said, the low is not great that was put in. So I'm not too excited to be doing anything with this just yet. You might get that move up to the POC, you might not. Let's see if it can put in a low and like defend this area a little bit. But yeah, but if you don't, like I said, if you don't defend this region of the chart, let's zoom out a little bit. We'll go to 4 hour. again, if you don't defend this region of the chart, and you can see right here why this is such an important region, like we just basically move this across, like that simple, okay? You can see why you would want to hold on to this region. If you don't, well, I mean, you could do something as simple as, okay, well, this is my range, right? Let's not extend that all the way. And you can see that this is the value area high, excuse me. And then you would start looking down and saying, okay, well, where's my value area low? We were talking about 19,916 to 19,301. Be coming in this region. That would be the area of interest. Because if you deviate a range, you're realistically looking to see it cycle. That would be the ideal scenario. Longing the middle of the range. So like there's a big misconception that I see being put around a lot on some of the social media right now where they're talking about like longing points of control and shit like that. Anyone that does any actual range trading knows that you're not looking to long the point of control because you're actually in the middle of the range in most cases, unless it's coming in at the top or the bottom. But most of the time, if you have a point of control here, like this is your overall range as of right now, right? If you were to include all price action and just, say, well, everything is one giant range, we're just going to go ahead and merge it all. This isn't necessarily the best long. You're in the middle of the range. It's kind of a place that you can get fucked on pretty easily. You can overshoot the target, things like that. You're much better off working off of invalidations down here because the lows are more defined. Better stop losses, better entries, better discounts. Like same shorts. Shorts are always done above the range or at the range highs, and same with right here. So that's all I'll say about that.
Could you not argue that if you were started to get a bounce from it, say you were looking at order flow, you tapped the point of control, and then you started to get a move away from it? Could you not say then you would long?
But if the order flow presents the opportunity to take that long, yes. I mean, like if you're watching the order flow and like you're present, I would never preset for a point of control like this. Like I know you wouldn't either. You know better, but like
because there's a clear stop loss position on the left there on the. I think it says the 20s.
Talking about this guy right here.
Yeah.
No, there is like in the sense that you can put your stop down here and risk getting it run, right? But in theory, it's a good place because you know that if you lose this area of the chart, you're probably heading to the val, right? That said, that's not always the case. The point of it is the best place to be looking for longs is going to be the value area low when price is considered undervalued because it's the least amount of risk and taking it back to the point of control and then up. Same with shorts. If you're going to take a long out of this position, you need to be watching the order flow, in my opinion. You need to be paying attention to that. You've got to be, present, going through. You don't have to be on the volume chart or anything, but you can be on, a number of the templates that we use and take a look. You could just be watching the delta. And the delta chart will tell you quite a bit, real time. You're not going to want to aggregate all that. You're going to want to make sure that you're looking at the delta chart on like a decent time frame, like a 2 mil or 5 mil. But you could easily take a long off of that. Just like NPOCs present good bounces, kind of like you're big on like the low time frame order blocks. I'm not like huge on them, but they present a certain percentage bounce generally.
I like them for when you're trying to catch a move. When you're trying to catch a move, do you know when a move's begun and you're thinking, "Fuck, I'm out of position. What can I do?" And then and then it comes back up. It doesn't take the high or wherever you're from, but it'll tap somewhere. And there's normally like a PVA in the area as well. So you've got a couple things in them regions where they link up.
I'm just big on like relevant levels, man. That's like you have your untapped daily that was here that we were kind of eyeballing with the weekly. But if you were to start like tossing on some of these other levels, like if we come down to this, you can see you've got a volume shelf, you've got the POC, but you've also got an untapped daily here. One could make an argument for an order block here. It looks like not quite, but you could make the argument for it. But if you zoomed in, there's probably one in there near that daily. So you could start narrowing it down that, if we came down to 21,200, probably going to get a reaction out of the area, but is it the best place to take along? Is it a reversal point or is it just a bounce? Kind of like right here with this weekly that we had this bounce. What'd you do? You bounce back, you back tested some old resistance and down you go. Realistically, if you wanted to, look at Bitcoin, we kind of talked about this. if we were to take a look at Bitcoin and say that we were going to get a bounce out of this region, for me, the weekly open and the EQ of our weekly initial balance here, that's all this is, weekly initial balance. And you can see exactly where we wick to, swing failure pattern of the highs here on the 4 hour, or you can zoom into the hourly even, and it looks a little different. But this was the area that had to get claimed, you know, like, so not a reversal, not a reversal. And realistically, until we're reclaiming probably 23.7 to 23.900, there's really no hopium in my opinion. So if we came all the way back up here and back tested those old dailies, I think you were talking about earlier, swing fail these highs, back test and then down, that would be the next best short opportunity, unless the range is reclaimed here, the balance gets re-entry, and then we target the EQ again. So, or the weekly open, however you want to do it. You know, you're splitting hairs by a couple $100 there. You know, a lot of different ways to skin the cat, I guess, is the way to put it. And that would also line up very, very nicely that if this ended up being a valid harmonic, and we still are yet to determine that, you know, it's valid based on everything else, but, you know, you could start looking at this like this and say, okay, well, this is my setup for the, you know, range high. And when you extend this over, you know, we'll get rid of these, so they're off the chart. Now, when you look at this and you say, well, here's the upper range of this shark where distribution was taking place, you can see, boom, resistance, 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 support, resistance, support, support, resistance, resistance, resistance. So it lines up very, very nicely that if we just copied this over and came over to here and I deleted this guy and then just pasted this, there you go. This would be the area you're looking for. Pretty clean. A lot of different ways to get the same idea is, I guess, the point that I'm making. It just depends on what kind of analysis you're looking to do. So until Bitcoin starts really realistically reclaiming 24,200, like, I would say early signs of bullishness, 23,000, like 903, the caveman level, this thing, I would be very cautious with what I was doing here. You know, in terms of, it doesn't mean you can't take long, because you definitely can't short here. It just means make sure you're taking care of yourself along the way, and you're not marrying positions thinking that we're going to rocket this up to like $35,000 or whatever gap fill number people are giving right now. Ooh, sorry, I didn't mean to yawn there. Give me just a second. I'm going to step away for a second. So the calm is yours for just a second here, man.
Sweet. I would say it's arguably the Monday low is where, you know, if you started to claim that, I'd say that's pretty bullish in my opinion, rather than it's more aggressive than the level Magic just stayed. Who have we got in here from the group? Is Twin in here? I think Twin's in here. T-Bone, Patrick, Goat Ninja, Philip Sapp. I don't think you're in the group. I'm not sure. Apologies if you are. Must be under a different name. Goat Ninja as well. Hope you're all well, guys. What we're looking for here, really, well, if you want to move up, Twin's here. How your calves, lad? What we're looking for is, really, you wanted the volume to come in. So as soon as you had these traders come in here, and you had, selling imbalances, which means there's strength in the selling. You can see the delta, which is the market orders. So these are set market orders. This is 1.7 million. Well, it's not necessarily just that in the candle, but obviously, if you're adding the market buys and the market shorts, the market longs, market shorts, and this is the total. Like, not the total, the what comes out on top. So a negative 1.7. So that shows you shorts are in control here. And with the open interest increasing as well, it shows you that it's new positions coming into the market right at the lows. Now, I love trading off trapped traders. So when you have the negative delta on the increasing open interest right at the bottom, right now they're currently trapped. But you have to think, okay, it's not a lot. There's not a lot of trapped traders there. Let me go and find a good example of where we have trapped traders. Where I took a sweet trade. go back. I think it was here, yeah. So here, this was on the 17th. That was Wednesday. Life of a trader, you pretty much lose track of days. Just above the weekly open. So you came above the weekly open, and you can see here you had a lot of buyers coming in. You had a lot of positive delta. Open interest was increasing the whole time. A lot of traders entered just above the weekly open. I put in the group for the guys that are in there. As soon as we lose the weekly open, it's going to dump. And the reason you knew that is because all these people that have bought up here will be trapped. And they had no follow through. The volume kind of came in, and then you saw it drop off, which is not what you want to see when you want to see a move, continue up, especially not claim a level when it's a level such as the weekly open. As soon as we dropped, you got a huge, fast move from that. It was a great little trade, but you can see in the comparison to how we are right now, there was a lot of buyers, up here. You had a fair few million in these candles here, and you had other signs. Open interest was obvious that they were coming in. The volume was clearly dropping off. You had multiple signs that this is not the area you want to be buying. And then you could argue you swung failed a few levels with this candle here, and with the it was fairly clear to take a short in that position. Right now, is it fairly clear to take a long? Do we have many trap traders? No. Is volume dropping off? Yes. So it just shows you that with the volume dropping off, yes, the move is weakening. But when we've got the key level another $200 below us, it's a more risky long. Are you going to be buying here then putting your stop loss below that key level? Definitely do not do that. I would not be doing that. I would really be waiting for that market structure to either come in. You want a clear sign to take a trade here. So yes, we haven't got the trap trade. We have got some trap traders, but not enough to really cater to a move up. How many do you need? Well, I would just say 1.7 is certainly not enough to consider this a good reversal. If it was to reverse here, you really want like 5+, and obviously it's and 5 obvious to spot shorts that would become trapped. You could argue that if we started to claim the VWAP, you've got 2.4 here on 3.1 million open interest. You could argue that if we were to claim like this level where the daily is, if we've got a daily level around here, Magic's got another level around here. If you were to claim this, you could say, now there's quite a fair few trapped shorts below this level. You could take a trade here. Target would be the daily open, if not further. If you were to claim the daily open, then your next level is the monthly open, and so on. But you have to trade it level to level. If you were to take a long, if you were to claim this level, your invalidation is down here. So the risk reward isn't ideal, but it's certainly a trade that, well, given the right order flow at the time, you could certainly be taking that. And I think that would be the trade. It'd be the safer trade than buying here and hoping that it gets back up there, because new here, what's this chart? So this is called the footprint chart. It shows us all. So you might have heard of order book, where you can see, on when you have your, I can't show you because I'm logged in. In fact, let me log out. I am logged out.
To sum it up, it's just market orders that have already executed.
So you see it on Bybit, yeah, you've got all these. This is the order book. This is where you can see limit orders in the chart. You see this. Now, one thing that a lot of people don't know, and there's a lot of people that trade the order book, because you can have on specific software, you can have a in-depth order book that allows you to see orders that have been set and then taken away, and it allows you to. There are trading techniques behind it. We don't do that because it can very easily be manipulated. So to stop it from being manipulated, what we like to do is look at orders that have come in and they've been taken into the chart.
Yeah,
This is yeah, they've been executed. So everything that you see here, all these numbers are these have 100% happened. These are real orders that have come into the chart. This here is $1.8 million worth of shorts that entered here. Now it could be longs closing, or it could be shorts entering into a position. This is what this is here. And then on the same level, you've had 708 market buys coming into the market. This isn't limit orders. This is market orders. So you can easily look at this and say, okay, someone with a fair few million quid has, 2 million quid almost, has taken a short at this level. Again, here you had a big bout. You had 2.2 million shorts and 2.1 million market longs. Using this information, it allows you to really get a picture for one, who's in control, two, trapped traders. Oh, just so much. It allows you to, it is an amazing piece of software that you can use to really, I feel it's almost, it's needed to be a day trader, because I don't think you can really get in and out of the market day in and day out without something like this. This is what market makers use. So the reason that I love looking for trap traders, I'm like, and it's not being the contrarian trader, just trading against the market. This is literally what the market makers are utilizing to spot, okay, if we have enough traders that are trapped here, we can push it to here to then gain our orders here. If you're thinking the market maker is always trading against you, which they're always trying to make the money from the retail, this allows you to spot where the retail are entering positions like this. This isn't a good trader taking a short at this level. This is a shit trader. Now, is that retail? I mean, we're all retail, so it allows you to spot, okay, even though he's got 2 million, it doesn't make him, he's definitely not smart with that money. That is an awful short. Now, the market maker could certainly spot this, and then what he could do is he could push it to a price where, like, if you're taking a short here, let's think, where is his stop loss? If we're going to use market structure, where is his stop loss? You could argue it's probably above these highs at 2295, and the market maker could push it to there. And then what would happen is you could see his order get taken effectively, or his stop loss get taken, and then you could analyze from that point of view. But yeah, it's a beautiful thing, and if you spend day in, day out looking at it, sometimes you just look at this chart and you can, after looking at it for so long and analyzing this chart in particular for like over a year of my life right now, pretty much every day looking at this chart. Sometimes you look at the chart and you're like, okay, I feel that it's going to go this way, and it's like you don't really know what you're looking at, but you just get a feeling, and it's a great thing when it pays out.
You do spend a lot of time on it, and it's much appreciated.
Yeah. It's great.
Yeah, but if you are day trading, to your point, it does help with day trading. But one of the biggest things that it really improved for me, and I do a fair bit of swing trading, as you guys know. I use it to find entries. So even if you're not day trading, like let's say we're coming down to a key level, like someone shouted out 21,200 earlier. And I said, yeah, I really think that's more of just a bounce zone. I don't think it's going to be a reversal. Well, this software is what you could use to go in and actually see the reaction real time and go, well, even if I think it's just a bounce zone, at least I know I'm getting a good entry. Like your risk is going to be mitigated. And then as the move is reversing, like let's say it bounces out of there and longs do come in, but it's really just shorts closing out and the open interest is going down. And you're like, this is actually a weak move. You can generally use a little bit of other TA to like go in and find where it's going to reverse from, like whether it's going to be something from the previous session or the current session, or maybe it's just a high time frame average, like a monthly VWAP or a regular VWAP, and you can say, well, I should take profits here if I took that long. And if it goes higher, it goes higher, but at least I was able to be profitable on this trade and not let the price reverse and then take that money back from me. Because that's what happens to a lot of people is they think they've nailed the low and they're not watching the order flow. And then all of a sudden, as price is reversing, they give back everything that they've earned, but they haven't really earned anything because they didn't take any profits. But had they been paying attention, you know, they would have known better, I guess is the best way to put it. So it's a pretty useful software.
It allows you to spot when, you know, it's difficult. It's certainly more difficult. Sometimes you have it clear cut. This right now, this is a more difficult one to spot. But it allows you to spot when a trend such as this is coming to an end. It allows you to, you know, spot when trends are coming to an end, the strength of moves. It allows you to spot. We have a how-to guide in the group, and I think it's the best
It's really good.
stuff out there on this. I really spent a lot of time, and I think it's very beginner friendly as well. It literally gives you what to look for entries, how to spot trend reversals, and really that is all you need. But you know, when you're looking at this with the how to, once you watch the how to guide, and you can say, okay, this is what I want for reversals, or this is what I want for entries. That combine that with just standard horizontal levels, if you were to just look at the dailies, the weeklies, key levels, key
Ranges.
highs and lows,
Yeah.
and then literally all you could do is, okay, set an alert here, and the group know I love alerts. There's already one set here. You can spot it there. As soon as it comes to this level, I'll get an alert and I'll go, okay, am I getting the order flow I want? Now you can use this, or you can use this chart that I made called Scalp Bay. Little Salt Bay reference there. And this is even more not in depth. It actually shows you less information, but it goes deeper into the information it does. This is a beautiful template, which I know a lot of the people in the group do utilize, because it allows you. I've got another entry system built for this as well. So the two of them combined, when you can see trap traders, or when trends are literally coming to an end, and then you get in the delta switch up where the shorts and the sells are getting weaker, and then suddenly you see the buys coming in, and it's a beautiful thing.
I stick
And
to
if you're
pretty basic
if you're a
stuff.
sad day trader, this stuff will turn you on.
Yeah, if you like day trading, like this is it's kind of like you said, like you almost have to have this. It is it's definitely changed the game. And to your point, like you said, I'm surprised more people don't use this. This was not readily available until after 2018, and I know that seems 4 years ago, but believe it or not, that's not that long in terms of trading. This was stuff that like retail didn't have access to. So it's been around since the early 2000s, but it was primarily just institutions that used it. So it's become a little bit more accessible, cheaper. There's other companies that offer it. ExoCharts seems to be the best one for the most in-depth, real-time market order stuff. But there are other places out there that offer similar stuff. Like ATS has a version of it. I don't like their order flow on it. You can get it, but it's not great. Sierra Charts.
In Sierra Charts, you don't have to pay for them, do you?
You do have to pay for Sierra Charts, and Exo's a pay service as well. We're not partnered or anything with them. Like we don't make any money from Exo, but like,
but it's so cheap.
in comparison, like Sierra Charts back in the day was like hundreds of dollars a month, and I think it's still up there quite a bit. But yeah, for like I think it's like $25 or $30 a month is what Exo Charts charges, and you can do more than just Bitcoin. You can do Ethereum, other coins like that. Like it, very, very good, great service. Like. And they've really improved their processes, and they are making more changes, which is good because, nothing is ever perfect the first time around. So it would be silly for them not to have an active presence in the space where they're constantly upgrading their services. Been pretty happy with it. And you know me, I was an ATAS guy before. So moving over to Exo in like the last, I would say 6 to 9 months for order flow only has been a pretty good experience, both on desktop and on the web version. Yeah, we don't use signals. Main reason I don't is it does not really, from what I can tell, I don't think it gives this here. And I've seen some people using it. Don't use that. I don't use either one of those things because they do operate off of potential orders. And I'll tell you right now, the reason we don't use limit orders or resting bid orders is because there is no spoofing regulation in crypto. And I can tell you from having done order flow for multiple years now that those guys are in for a really rude awakening over time. The statistics will not add up. So that's why market orders are king. If you're not using market orders, you are definitely subjecting yourself to some manipulation there. But yeah, signals can straight up, they can jump off a bridge. I'm good on that.
What is that? Is that the one that shows
Yep.
you the naked controls and stuff? Yeah.
Yeah, I don't have any comments. I don't have anything positive to say about that group. So I'll move on from that topic. Just how it is.
But it looks like we're stalling here. So what you'd have wanted to see is more shorts to be trapped, and then instead of volume be dropping off, going in the direction of the shorts, which you could argue it is here to here. But then you would have wanted to see the buyers come in and volume be increasing as we got the move away. Really, what's happened is we've just stalled here. So yeah, I'm actually looking for this to be taken out this low. I think the trade, you just have to wait for that key level below us. It's not really worth risking it all here for, what is that? It's probably a percentage when you could eat, but the risk reward isn't good on this trade unless you put your stop loss here. But again, risk your trade. It looks like we have a bot. Block user on YouTube. 69mega.com. Have a good time. Find your love.
I was going to report him until I read that. So I'm definitely trying to do all of that. So I'll just let him keep going. No, I'm kidding.
I've blocked it.
Yeah. No, you can't help it on the internet these days. That's just what happens. But yeah, no. The book map has been around for a while, Patrick. I've seen it. Used to have some guys in an old group that I helped out with that used it. And again, like, it's not that it's useless information by any means. I don't think I'm insinuating that. And what I will say, though, is that statistically over time, that data can be manipulated a little bit more. So there's a time and a place for it. My problem with it is that even if you identify the level, you're still going to have to gauge the reaction. So, and most of the time with those levels that they're giving, they're not giving you a secret level that you can't just identify by actually doing proper technical analysis on the chart. And if you learn to identify the levels the proper way, which there's even a free video in my videos somewhere on my uploads on how we identify levels, I've left it up. It identifies levels based on where trap traders are going to be, and you're going to get 3 different types of reactions off the level. So you're going to get people that are trapped in positions looking to close. You're going to get people that are defending the area, and you're going to get people that are closing their position and taking profits. So that's why the reactions are the way they are. It's basically a liquidity hotspot, and you'll find that they're always almost always going to line up with levels that you'll find on something like that. So for me, I usually just identify those in advance and then gauge the reaction and go from there. It's just the safest way to do it. Prefer not to lose more trades. So that's where I'm at on it. The book map just adds an extra wrinkle that I just don't see necessary at this time. Mainly because until there's actual regulation, like all those bids that I used to trade with a guy who would put up a buy wall on BitMEX, and we're talking millions of Bitcoin, like not Bitcoins, but like millions of dollars worth of Bitcoin, hold the price up just so we could fill shorts, and then he'd just move it. People would see it and they'd think that they were good. Same with like shorts to the upside. So, you can't do that really in traditional markets. However, you can in Bitcoin, you can in cryptocurrency. You can straight up basically, I think it's called spoofing. So you do have to worry about that. But it's probably not as common as, one might think, but it is definitely there.
There's certainly people that trade using just the order book alone, but it's not like I don't think there is in the crypto market. I don't think I've ever seen anyone be trading just the order book in the crypto market.
It's pretty hard to do. You can. I would argue that you could probably do it. I just think that you're going to take more losses than you need to, because you have to think you're going to get a lot of false signals. Like you're going to have to you should always have good risk management, but I mean, you'd have to have like super strict risk management at that point. And then to the current comment about XRP took enough pain to brighten the future money of cryptocurrency. I don't know much about XRP's future, but the chart was the chart, and definitely called that one to a T, said 29 cents back in June of 2021, and that the top was in, and that the lawsuit was already priced into the $1.96 high. So take that for what you will. That XRP chart is, I guess I'll pull it up. I'll pull up an XRP chart and we'll take a look.
Do it. Get some.
It's in the title. So it's in the title, so we might as well do it.
I'll shout if anything's happening in Bitcoin.
Yeah, you let me know. But in reality,
I did think the same, Danny, because of the all caps lock. I was like, we've got another one here. But the fact that it was somewhat relevant, I thought, okay.
Well, at least it's a crypto relevant. It's not porn, right?
Yeah.
You guys are gonna get a kick out. You guys will get a kick out of this chart. You guys will get a kick out of this chart because again, I have not updated this chart in months, and I don't have to. So we were just talking about how you can identify the proper levels and go from there, right? So I had identified 29 cents. It was just a high time frame point of control from our previous range. So I believe I could actually pull it like so, and we should be able to get that area on the chart like so. Yeah, coming in here, you can see that you're basically at the value area high of it. The problem with this is you've now come up to a 6-month level here at 39.248 cents, and you've rejected perfectly. So again, this is coming back to high time frame levels that all you had to do was properly identify the chart. You really need to see this one get going. Otherwise, this is a giant range. These are just 12-month levels right here. So you can see 19.25 cents and $1.99. These were levels that were given back in 2021. Looking for the rotation. So if price does not eventually regain probably, I say 50 cents, but in reality, 60, probably 61, you're looking at the potential rotation all the way down to like 19 and 17 cents over time. And if you actually lose 14 cents, this is a pretty bad chart. This is a very bad chart. This is a giant fucking double top at that point, and you're looking for single digits. So do I think that XRP is a bad investment, things like that? I don't really have an opinion. I would just tell you that based on the chart, there's nothing here saying buy XRP. Everything says that while we've hit the target that we were looking for, you can see that the low is 28,704. You've also come up to resistance, and if things don't get moving, you have the potential of coming all the way down another, what is this? Just from where our current stance is, another 47%. And to some people, they say that doesn't matter. But when you look at a coin like XRP and you start actually stating things like, he said XRP chart. It's on. Sorry, guys. When you look at a coin like XRP, you have to look at this and say that how many people say I'm never selling my XRP, it's going to 10K. When you get things like that, you have to eventually have a terminal shakeout. Like this is a terminal shakeout right here, even though it doesn't look like it. It definitely is, because this is a massive move down. You've swung, fell multiple lows, kind of like the Bitcoin chart. 56% move down, all in one candle on a weekly. You have to get something like that that's going to shake people out. And all those guys that said they're going to hold XRP forever, they have to be taken out of the equation, so to speak. When is capitulation? It may be at the bottom of the range here. It could very easily come down here and then bounce out. It could bounce from this current region. Like, we don't really know. But until XRP actually starts showing strength, it's just not something that me as a trader, more of a trader than investor, is interested in. Now, I have owned XRP in the recent past. I owned it for this move up. I think I said the top would be 86 cents on this. I was wrong. It went to 79 according to this chart. So I was off a little bit, but I did call that back here when we were trading in the 20s, like 23 cents. Same with right here. I said the top maximum was going to be about $2. We hit $1.96. And then after that, I called for 29 cents, which we've now hit. And that's just based on range rotations, based on the idea of how accumulation and distribution is going to take place. So XRP is in a very interesting spot. The lawsuit is a really interesting black swan type thing, where if they actually lose that case, which I'm not saying they're going to, I know there's a lot of information out there, but you guys also have to think that, like, the people who are putting this information out there telling you that XRP is only going to win the case are also only pro XRP channels. it's, you have to like start connecting those dots when you see that and you go, man, where does that base of, I'm not to use the word cult, but like, where does the cult begin to lose their faith? You know, is it here? Is it 19 cents? Is it 14 cents? Is it fucking 3 cents? You know, we have to see that move, or we have to see strength. Like, you can't just blindly buy here and be like, everything's going to be fine. You know, it's just not a good idea, especially anytime that you're held up in court with the SEC. And you have been for over a year. So for me, it's hit my major target at 29 cents. So like, let's say a person was holding a short from up here. This is a giant descending triangle, obviously. One of the more obvious descending triangles. I'm not going to throw any names out on TikTok, but there were TikTokers saying that they believe in XRP and you should be buying 62 cents. This is 62 cents, just so everybody knows, right here. And you can see that this was a giant fucking descending triangle. So it was a terrible buy, but they were all buying it because, you know, they drank the Kool-Aid. But in reality, the chart said otherwise. So major target, you have to take profits there if you were in a short. However, if you're holding this coin, you know, depending on where you bought is going to really dictate the next coming emotions for you. Because if it dumps further and you bought up here, you know, you might start selling. You might finally break. Me personally, I would never hold a downtrend like this, especially in such an obvious bearish pattern. But to each their own, you know. I'm not even like a buyer down here. I'm not going to lie. Like, I'm not a blind buyer in this region either. Like, I think I would be for a bounce. I would buy the bounce just to do so. Like, just like this bounce right here. XRP has underperformed the entire bull market. It underperformed the bounce even. A lot of altcoins bounced almost 100%. This one's only bounced 42. So to me, I look at it and I say, can it go lower? It seems like lower is more probable. And until price proves me wrong, there's really no reason for me to actually risk any capital on this project. So I'm still looking for potentially 19 cents over time. If I had to put money on where it's going, I would say 19 cents. It's not what people want to hear, but it's just the truth in the chart. So is what it is. That's kind of a long, convoluted way. I'm trying to be nice and not step on too many toes, because I know XRP, you know, they've cultivated a certain attitude and a certain expectation, I think. And I think that's a really, really dangerous thing to do anytime that you're talking about a speculative class of assets, like not just XRP, like all of cryptocurrency. You know, outside of like Bitcoin and Ethereum, nothing is really sacred in this realm. And like even Ethereum, you look at it and you're like, what's going on with the technology? Is it outdated? There's a lot of like competitors, but it doesn't seem like it is. The network's very strong. So I would put Bitcoin and Ethereum in kind of like a league of their own. And then everything else is still pretty speculative in terms of like a 5 to 10 year outlook. Even though XRP has been around a long time, it's also been underperforming the entire time. Like it's one of the more prominent underperformers in this last bull run, actually, which is something to take note of, you know, especially if you're going to hold it. I heard you chime in like you want to say something about Bitcoin. Can you do milk MIM? Oh, yeah, well, I guess I'm on my own then. We'll wrap this up pretty quick if there's no one else in here. Yeah, it is just me. So cool. We did say that we would cover what's in the title here. ETH, XRP, and Atom. So I do have an Atom chart. Not that you guys care too much. Atom is one that I did buy, right? So I'm covering some coins that I did buy. So I don't buy a lot of altcoins. You guys know that I'm pretty selective in what I buy. So Atom actually came all the way down to our buy zone. This was a two-part trade right here. So this was the first trade was, I think it was Rivalry. I told him I would be buying down to like $8.37. This thing came down almost perfectly. 50% bounce back up to the 12M1, which is the S1 of the 12M1, I should state. And then we foresaw give all that move back as Bitcoin was dumping into our buy zone right here. So this would be a very, very nice buy zone. So I have this highlighted from yesterday. We'll take that off for now. This was the buy zone. This is a very nice back test of the head and shoulders. And from there, you've now come up to macro resistance. So unless you're actually going to see $12.21 reclaimed on Atom, I would be looking to buy Atom between $8.76 all the way down to somewhere around $7.56. Kind of a big window, but you're dealing with big prices. But the ideal area for this, especially if Bitcoin's going to be pulling back, is going to be the value area low of this range. So I started my buys a little bit early. This is based on a monthly swing failure pattern, actually. And you could move this line around a little bit. Like you can see that this is your swing failure pattern here, but you could also move it down to here and also see that you have an untapped monthly at 756. So you've got a bit of a wide zone that if you were looking to accumulate this for the long haul and you're convinced, not convinced, but you're persuaded a little bit that you think that, you know, hey, my bias is I should be looking for entries right now, good entries on these projects rather than looking for shorts, because even though this is potentially still just part of a bear market, eventually the bear market is ending. In my opinion, if the bear market's going to continue, we're going to see new lows. We're going to see them towards the end of the year. Yeah, you'd start accumulating, right? And to me, this would be the first area of interest. If I had no exposure looking for a pullback, this would be the area of interest. That's making the assumption that this is the low. Now, you start losing this area, well, yeah, you probably challenge into this low, and I'd be looking for a swing failure pattern here, and I'd be happy to buy more. But yeah, if I'm looking for accumulation on Atom, I'm going to be a little patient. I'm going to wait for that extra 20 to 25% back, and then start maybe adding new positions in, assuming that the market is looking okay and Bitcoin's not just dumping to all hell. So that would be Atom, unless it's regaining 1221, which is the level that we've had up for probably 6 months now. Again, this level was put on here on the 1st of January. This is the level. So I would I'd be cautious, and I'd just be looking for this pullback. You've got a nice golden pocket, untapped monthly support, monthly swing failure pattern, all that's there. So Ethereum is one that I have not updated almost at all. I almost rely on CVO is not on the live, but I rely on CVO's charts way more than I should for Ethereum. But however, we will take a peek at it. So this was an Ethereum chart. Again, not updated this thing in weeks, haven't had to. So you had a really nice single print right here. So for those that don't know, a single print is kind of like where you find buyer and seller exhaustion. So the last buyer or seller capitulated right here, and you had a single print that moved its way up, right? So the single print opens below this box. Basically what that means is that if you lose this box here, and this box does sit at 87 to 915, which you can see that you respected it pretty well here. You wicked into it. You lose that box, and at a minimum, you're probably going to 736. The SP1 and SP2, single print 1, single print 2, they do end at 760. So to me, I just looked at it as a zone between 736 and 789. Doesn't seem like a very large move, but it really is. So that's the context behind this area of the chart and why you should have been paying attention to it, because it is another 25% down at that point, which, you know, on Ethereum and something that's probably going to be one of the larger holdings of a person's portfolio, you really don't care too much about a 25% dip. I guess you're probably buying that whole thing. That said, you've come up and you've now come into this region of the chart where you can see this was prior support, right? And now you want to see 1646 basically held as support. If you don't, 1418 is the merge value area low from certain polls that I had made a while back. Also, if you just went over here, it's also your all-time high. So they line up very nice that you've got merge value area lows. So realistically, to me, I look at this and I say anything between 1646 and 1418 is probably an opportunistic area for right now. And I would be, I wouldn't say I would be excited, but depending on what Bitcoin and the rest of the market, traditional markets, things like that are doing, in the scenario that we see that, I would be looking to potentially trade that because it will probably offer up some very nice trades. You know, if you start losing 1418, you know, you go back above the all-time high and then you give it back up. Yeah, you're probably going to re-challenge this low and you can start looking for a double bottom. You just have to understand that you've already tested this single print 1, 2, 3, 4 times. You lose that single print and you're looking to take these lows and run it down to $760. But I think that's getting way ahead of ourselves on the chart. I think that's just something that, like, if you're a trader, you have to be aware of. If you're investing with a time horizon that's several years out, you don't really give a shit. You probably buy more if you have the capital anyway. But realistically, until $2,600 is reclaimed, This is still kind of just a rally, like it's a trade. It's not necessarily an investment unless you're convinced that this is a great time to be looking for that time horizon. But once you reclaim $2,600, you can kind of, that's this line right here. It's the merge point of control. You just kind of tell, like looking at it, right? You're getting back into this old range. You could then very easily, start marking it off and saying, this is where I'd like to be. And yeah, you'd be doing just fine at that point. You're actually, let's extend this over. Let's merge this real high. Yeah, you're probably looking at $3,200 at that point. And you're currently messing around with the point of control. The value area low comes in at 1418. So again, validating what we just talked about. So 1418 really is a key level. Yeah, you want to see 2,600 reclaimed. Then you're looking up to 3,200. You reclaim 3,200, and you're probably going to at least challenge into this all-time high. And at that point, things probably look a lot different across the board on all assets. So I would expect new highs at that. That's so far away. That's so far away. That's literally 100% move from where we are. Yeah, if Bitcoin starts losing levels, man, I mean, you've got some problems across the space. I wouldn't say problems. You get opportunities, to buy lower if you're looking to buy. If you're looking to short, there's short opportunities as well. I do have a QNT chart. QNT is one that I didn't buy as much as I should have. This is another chart I have not updated in a long time, guys. But if you guys follow me on YouTube, you know that I basically handed you this whole region of the chart where I said this would be the low for the foreseeable low. And we went from here to, box to box, essentially. These boxes are the main focus. You can ignore some of these smaller levels in between. But we did note that if you lose this level, right, you lose these levels, specifically, I think it was like 69,957, 95.7. We were looking for $40.40, and price actually came down to $48.81, front running my level, which was really annoying. And then we got our final flush on Bitcoin, and we did get the swing failure pattern of the low, and you hit $40.40. That was the target. I think we actually, $40.60 was the low. So it did front run the overall target by 20 cents. But from there, what did you do? You back tested the old low perfectly right here. It's a thing of beauty right there. And from there, these levels do need to get washed out because they are now old, but still doing what they need to do. And you've got a nice back test of support. What did you do? You went to the Q2, which was a fresh level that we hadn't tapped yet. And yeah, so I do need to update this chart a little more. But however, I would just be looking at this and kind of looking at the lows here and saying, $82 to $69, like this is support. This has to hold. You can see this wick here, right? You can see the market structure that's lining up there. We don't need to do a whole lot of homework on this. We can just look at it and say, this is going to be important, because if we lose this, we'll probably re-challenge, $50. Not what people want to hear, but it depends on how you're looking at the market. It could be very much so an opportunity. I think that's a far cry away from where we are right now. That would really require Bitcoin to dump to like possibly even a new low to get there. So I would be looking at, you have $97 coming in, but I would realistically be looking between $82 and $69 as the next potential area on the chart. And yeah, that's like your 50% pullback Dow's theory. It would also get you just below the low that we have now, which is always good, swing failing a low. But yeah, your golden pocket, $63. So for me, I'm still looking at $82.34 to $69.95 as being very key support. That if we lose it, we'll probably re-challenge the low. Maybe we wick below it into that golden pocket. Maybe we don't. But for me, if I was looking for fresh positions, I would wait for support, because that's the best place to look for positions, guys. Always at support. If you're looking to buy, you got to wait for support, right? You can't just buy randomly in the middle. That's kind of the moral of the story. And most of my updates is like, hey, this is the support, this is the resistance. It's just the support and resistance I give you is generally going to be very accurate. That's what you need to know. So I don't know what Metis is, Jack. But I'm probably going to pop off here just because I was live before this as well for an hour. So I've been live for several hours now, since about 6:30. I've spent 3 of those hours of the 4 that have gone on live, whether it's this one or on Debate Crypto. So I'm probably going to pop off, and it's not to ignore you. I do apologize. But if you join another time and you hit me up earlier in the stream, I'm glad to look at a few altcoins. I don't normally do that too much. I let CVO do it because that's like all he does. And he has really clean, updated charts for all of them, which I, like I said, like we can all take it for granted, but the guy does have very nice charts. So if anybody does have a question, just put a comment on the video, like, subscribe. You guys know the whole spiel. And I will catch you guys in the next update. I'll try to get a little more frequent with my static updates. Maybe I'll do some, if you comment some coins that you want me to look at, Jack, I'll see if I can't do a static update on them sometimes. I am looking to do more public videos, but not always live streams. So I'll just put them out. You can watch them at your leisure that way. All right, guys. Have a good evening.